Hello all. Welcome to the fifth video for Module 1, Chapter 1. Um, in this video, we're going to talk about the source concept of income. Um, how the Income Tax Act determines what counts as income and what doesn't is based on this idea that income must come from a source, and particularly a continuous source. So I'm going to talk about a couple concepts of income. We're going to emphasize the source of income, and we'll go through an exercise. So when we talk about income or sources of income, there's alternate ways you can look at it. When you're an economist, they measure the net worth of capital maintenance, which in other words is they look at the value of your assets and the services between 2 points in time. If the value has increased, you've received some sort of income. Your economic output or your economic position has changed. Accountants follow the concept of income really from accounting principles, and these are principles of presentation. Money's coming in from customers or perhaps loans, and we spend the money on certain expenses. So what comes in, because loans have to be repaid, they're not considered a profit point. They're not considered, a source of income. So we look at the income that comes in that we get to keep, and we subtract the expenses in which we lose. So we emphasize a bottom line. The revenues coming in minus the expenses coming out gives us an overall profit margin. The Income Tax Act differs slightly because it's trying to look at income that comes from a continuous source. So there's many types of one-time events that aren't taxed by the Tax Act, even though it is an incoming amount of money, because it's not coming from a continuous source, it's not considered taxable. An example of this would be gifts. In other countries, sometimes gifts can be taxable, but in Canada, a gift between two friends, family members, is not considered to be a continuous source of income or an income based on, capital and labor. And so that one-time event is non-taxable. It's not an income source. So even though I've gained revenues, I'm not taxed on it. Now, the source of income concept is designed to raise tax revenues and meet certain policy objectives, but they're trying to drive source of income towards certain types of income. So the definition of source of income is something that has the potential to generate positive cash flow, net of expenses, over a period of time. And they try to connect this to three things: a person's labor, their capital, or their property. So your labor is your actual effort, your intention. When it comes to an individual's labor, the largest source of income is employment income. I go to my job, I put in effort to meet objectives, and they in turn will give me money for that effort, for that labor. So that is a source of income. Capital and property, your capital is the money you've put up, the money you've placed at risk in order to get a return. And property is something you've bought and own. Property sometimes has the ability to generate revenues in its own right. So if you start a business, you've probably put up some money, you're probably putting in effort, and especially in manufacturing and such, materials and products are usually an output of some type of property. So we have money, we have property, we have labor. Together, they're often a source of business income. Now, what if I buy a piece of property that itself generates income? So if I have money in a bank account that generates interest, maybe I own shares that pay out dividends. Perhaps I own a house and so I get rental income from anyone living in that house. I get my ownership of those incoming revenues, those incoming monetary amounts, is by virtue of my ownership of that property. So property income also is referred to as investment income or passive income. And normally we call it passive income because it doesn't include a labor portion. It's mostly just by virtue of ownership of property. So these are the three main sources of income: employment, business, and property. So the Tax Act taxes these three sources because it's recognized as source of continuous income, which we go on to the next slide. But there are other income types that get taxed. There's capital gains, and perhaps spousal support payments are two examples. These types of incomes are specifically identified in the Tax Act. So we have these three sources of income. Anything that's not a source of income has to be specifically called out, specifically itemized by the Tax Act, as this is something else we will tax as well. So capital gains doesn't fall into the idea of a source of income, but because they've made specific rules for it, it is another item that gets taxed. So, how do we define what is a source of income and what is not? I've mentioned several times continuity is one of the biggest factors they look at. So, for something to be continuous, it has to be continuous activity over a period of time. So, more often than not, single one-time transactions are not a source. However, there are rules to counter this issue because when we look at business income, some businesses deal in really high ticket items, luxury cars, houses. And so when you deal, you sell yachts. Now, this business might only sell one yacht in a year. And so, since there's a one-time transaction, it is related to their business. They are partaking in the capital and the labor to produce this boat that's going to be sold. So even though they only sold one, it's directly related to a business adventure. So there are rules to help catch one-time transactions that fit business descriptions. But more often than not, one-time amounts, gifts and whatnot, are not taxed as a source of income. When we take part in a continuous activity, we want that activity to have the capability to generate a positive return. This is known as profit motive. If I partake in an activity, perhaps I'm into knitting, and so I'm buying and selling materials. So I have yarn, I'm knitting up little sweaters and booties, and it's just something as a hobby, and I tend to donate them to hospitals, or maybe I go to the occasional craft fair and people might give me some money back for some of the things I make, but I'm really just using that money to help fund buying the yarn. I have no expectation of ever coming out ahead. I'm really just doing these things to help shore up my expenses for taking part in my hobby. So if I have no intention of ever earning a profit, then it's not a source of income. So they're not going to tax the revenues because if they tried to do that, I would be allowed to claim the expenses. And since the expenses are always going to be more than the income, I would just be subtracting my income, never adding to it. So um, they don't consider a source concept or a source income unless there's any intention or eventual ability. Now, I must warn you, businesses don't have to make money, but as long as making money is what they're trying for, then it can be a source income. So active activity undertaken in the same manner as someone operating a successful business. Are you trying to follow along the footsteps of someone who's successful at it? Sometimes businesses take time to just sort of get started. They often have losses in the first couple of years, but once they get the economies of scales, once they get a customer base, then they'll start to make money. So they'll look at your activity and they say, is this your hobby? Or is this a business you're actually trying for? And income's determined on a net basis. So anytime you have cash flows coming in, you're allowed to subtract from those cash flows your expenses, your cash outflows, specifically paying for what's necessary to earn that income. So, like I said, let's say now I have a profit motive. My knit sweaters, they're big on Etsy and I'm now making money. So when I sell a sweater, I'm allowed to expense the yarn I purchased to make that sweater. Um, let's say I get a pattern and there's a lot of people who want my sweaters. So I hire someone to knit sweaters with me so we can get those sweaters out the door. Well, that person I'm going to pay a salary. I'm paying them money to produce more sweaters. So that expense, because it directly relates to my income source, I can subtract it from the overall income. So that's what they mean by a net basis. Net basis is after certain amounts are subtracted. So gross income minus related expenses. So sources of income is dictated in subdivisions A and B, I'm not going to, I don't think we ever test you on the subdivisions, but just so you're aware, employment, business, and property. Subdivision C is where we identify capital gains and losses. So when we're trying to calculate our net income, first we add in our sources of income, then we'll add in our net capital gains. Then we might have other income, those events like spousal support, which is one of our examples. And then we're allowed other deductions, expenses and certain items related to, that are subtracted from our income. So going to the exercise related to this, here's three transactions or three types of incomes we've gotten. Which ones are sources of income? The first one is a lottery ticket win of $10,000. Now, lottery ticket win, when I bought the ticket, I had an expectation of profit because I wanted to win, right? The thing about the expectation of profit is even though I wanted to win the $10,000, the likelihood that I personally would win the $10,000 is very low. So even though I expected to win, a reasonable expectation was that ticket was going to lose. And so it doesn't quite fit the profit motive, even though people buy lottery tickets hoping to make money. The other thing about it is it's a one-time transaction. It's very difficult to continuously win money from the lottery just because of the probabilities. And there's not really labor related to it because it's mostly an aspect of property. So I bought a piece of property and that has the potential to earn money. So because it's property that can earn money, because there's an expectation or a hope to earn money, we might consider it a source of income, but it can't be relied on for continuous source of income. And the expectation for a reasonable person that it will earn those profits is quite low. So it's not actually considered a source of income. So the CRA doesn't tax lottery winnings. The federal government doesn't tax lottery winnings. If you're lucky enough, you've won the lottery, fantastic. That is tax-free in Canada. An inheritance of $25,000 from a family member. Um, Money you get from an inheritance, hopefully, you cannot rely on a continuous basis. I think if someone's relying on a continuous stream of family inheritance, they live a life of tragedy. And so it doesn't fit that continuous intention. It's not related to labor or capital or property because I don't own those things. Someone I'm related to owns those things. So how inheritance is treated is when a person dies, the value of everything is measured and taxed in the hands of the estate of the dead person. Any monies that are left can then be distributed to beneficiaries. And so, since this is after tax amounts, it is not taxed in the hands of the beneficiary. So, when I inherit money, it's not going to be taxed for me, mostly because it's not continuous. Um, there's no continuity. So, inheritance from a family member is not a source of income. Now, if I took that inheritance and put it in a bank account, and after a year that bank account earned $600 of interest, that does become a source of income because that interest is related to property I'm holding on to. I got $25,000 tax free. I put that money in a bank account, and now by virtue of owning that money, it is generating a continuous amount of income. It's generating interest. So that $600 is a source of income. 4 and 5 are similarly related because they're kind of the same activity. $800 in sales of surplus vegetables from your home-based garden. You and your family consume most of what you grow. The next example is 48,000 in sales of vegetables from a 10-acre garden on property purchased alongside your home. You are a professional accountant and you and your family consume approximately 1.5% of what you grow. So this is similar items. I've made some money off of vegetables grown in a garden. The first garden, I'm not growing the vegetables with intention to make money. And because of that, there's no profit motive. Without the profit motive, the expectation for positive returns, the $800 is probably just recovering a little bit of my gardening expenses, but most of what I garden is for my benefit or the benefit of my family. So this is not a source of income and it won't be taxed. The $48,000, however, is a source of income because a 10-acre garden is probably more than can reasonably expected to feed one family. If I'm putting in the effort to grow on 10 acres, and I have expectation of income since it's earning me $48,000, then it can probably be expected that this is a business. It is a farming business. Even though it might be of a small range, 10 acres, the continuous activity of farming this land seems to be in pursuit of those additional revenues. The fact that I am a professional accountant is secondary. It does come in when we talk about part-time gardening or part-time farming in chapter 7. But for the time being, it doesn't really mean anything. I think this is trying to say that we have a job, and so maybe this garden isn't our primary source of income. But even though it's not the primary source of income, it's still a source of income. And we only consume a small percentage of what we grow, 1.5%. So the overwhelming majority of what we grow is for sale. So this is a business. This is a source of income. And then we have a cash gift from friends. Gifts, customarily, are non-taxable in Canada because it's not a continuous source. I had a birthday, a friend gave me $100. They're very nice. I can't rely on that to earn income to pay my bills. It was a nice gesture done by someone who knows me. So cash gifts are often one time. It might be more than one time. You've been friends for a long time. You occasionally exchange gifts, but those cash gifts from friends are not considered a source of income. They're not continuous. They're not by virtue of your labor. They're by virtue of your relationship. So when we go to the solution page, our lottery ticket, inheritance, and cash gift, none have continuity, so they are not sources of income. The interest on deposit is there's continuity by virtue of property we own, and there's an expected return, so that's yes. And for the hobby farm and the farm business, only one has a profit motive. So the one with a profit motive is a source of income. Okay. When we come back in the next video, we are going to look at calculating net income and actually performing that calculation. So thank you for your time. See you in the next video.